Hi everyone, today I'm going to talk about the 5 most common mistakes that beginner traders do. So listen up and try to correct them.
Wake up, newbies! Class is in session!
First and foremost, the non-use of stop loss and take profit. Quite a few traders, especially beginners, they don't use stop loss, which is a no-no. And why? Let me explain. Stop loss, it's an application that stops the trade should the trade go against you. Now, quite a lot of people don't use it. They keep thinking, oh, it's going against me for now. At some point, it's going to reverse. 90% of the time, it doesn't. If a trade is sent on its way, it would keep on going on its way. That's A. B, as well, is the take profit. Don't be greedy. Win the trade. Secure yourself. Again, on the same subject, another misconception that I hear. Imagine if there is a football game and you're the referee. The game ends when the referee blows the whistle, which some of them apply. Oh, it's going against me, but I'm going to wait until it goes in my favor. Yeah, there is a chance that the losing trade might go your way, but after you enter in a huge loss. And let's not forget, since you're losing leverage products, meaning that your equity would deplete slowly, meaning that at some point you need to replenish your equity, which is right there and then you have a big loss. Also, if you have 5 trades, 3 of them are unsuccessful because you use stop loss, imagine if you didn't. The 3 would have been 5. So apply stop loss and take profit. Take it easy and learn from your losses. See what went wrong.
I'm learning.
Risk-reward ratio. I'll make it as simple as possible. Have you heard the term 2-to-1 or 3-to-1? That's the same thing that applies here. Okay? When you enter a trade, you enter the trade with the aim of making some money, but put down a number. And also put down a number of how much are you willing to lose. The same thing that we said, stop loss and take profit. So if you're entering a trade at price A, you're willing to come out or stop the trade at price C, and then willing to lose minus A. So as I said, 2-to-1, 3-to-1. This in the long term would have profits instead of losses. If you're entering a trade and you keep on waiting, the 3-to-1 or 2-to-1 reverses, becomes minus 2-to-1 and minus 3-to-1. So keep in mind the risk and the reward ratio. Also, another thing that you want to keep in mind, percentages. So I made 3 trades, my winning percentage was this, my losing percentage was that. If one falls way too much, that is the negative, try to increase it, and vice versa. Decrease it if your profits are not good enough. Number 3, euphoria or get rich quick. That's a huge thing that gets done, again, from both experienced and inexperienced traders. Let's just say that I was lucky, or at the time that I traded, everything was going my way. It does not mean that you are not vulnerable. It does not mean that it's going to continue going. No matter how hard you try, the losses would come. Because nobody's perfect, nobody's God. That's 1. 2, everybody's bound to make a mistake. So, what I'm trying to say is this. If you had a couple of successful trades consecutively, or if you won big because the market reacted way in your favor, it doesn't mean that you got to keep on going without putting the thought, without being careful, without treading a level course. So keep in mind, euphoria, trying to get rich as fast as possible, does not happen. Take it out of your mind. And as we said before in previous video, Rome was not built in a day. It took time and effort and throwing it down and rebuilding it from the beginning. Number 4, and highly important, I see quite a lot of beginner traders do that. Fear of missing out and overtrade. Quite a few times we all see something booming, having a bubble, whether that is crypto, even if that is, currency or a particular stock, so on and so forth. It does not mean that you have to trade it. It does not mean that you have to be in 5 places at the same time. You can do that. Nobody's stopping you, but you're exposing yourself too much, and that's when the risk triples, quadruples. So having a lot of trades or trying to enter a market that you haven't before just because you think, oh, this guy can do it, I can do it. Or why should I be missing out? Or why should this guy be more successful than me? No, take all those things out of your mind. Stick to a plan. Learn how to walk, then how to fly. Last but not least, have a trading plan. Do not just trade just to trade. Pick up your asset, pick up the market or markets that you want to trade, do your research, repeat the process. A trading plan would help you a lot in becoming more organized, more aware of the markets or the asset you enter, more disciplined, and all those three will lead to more successful trader. Everybody who's been successful, trading or not, had always had a plan. It's a set of rules. You need to put them down, follow them. This will lead you to success. If you're trading because the market is booming now, or if you're trading because a friend says and all that, that's only a short term. In the long term, you need the trading plan. Revise the trading plan, stick to it no matter what the outcome is, and keep on repeating it. By repeating it, you're improving it. By improving, you become a more successful trader. Those are the 5 points. Make sure you follow them, try to apply them. You would see the difference.
Wise words, my learned lord.
Once again, this is Neon from Fondex. Make sure you subscribe to our channel for more videos. See ya.